week. Let's talk business now. We're joined now to end the week by our business editor, Giles Beckford from Wellington. Giles, welcome to the end of the week. What are we talking about tonight?
We're talking about alleged market manipulation and the first case brought by the Financial Markets Authority against a fund manager, a man called Mark Warminger, who was working for Milford Asset Management. Now, the FMA, which is now the watchdog, the financial market policeman, alleged that Mr. Warminger manipulated prices on the stock exchange, and they brought 10 specific allegations against him, where they said that he had attempted to alter the price, to manipulate the price so that he could enhance the returns that he got on trades that he was making. Now, it's quite technical. We won't go into the details, but suffice to say that the High Court held a 1-month hearing on this. It's a civil case and not a criminal case, and the judgment's been delivered today. Mr. Warminger has been found to have manipulated 2 occasions where he's been proven to the court's satisfaction of playing with prices. The other 8 have not been proven and have been dismissed. At this stage, we don't know what the penalties, if any, there will be. The judge has said that will be a case for another day. But it should be said that this is really the Financial Markets Authority, who were tipped off by the New Zealand Stock Exchange to what they regarded as some unusual trading practices going on and some unusual trade price movements. They were tipped off, and this is the Financial Markets Authority trying to flex its muscle. It says it was about promoting good market conduct so that investors can have confidence in our stock exchange, which we have to say is a pretty small one. It's thinly traded, it's dominated by big institutional investors, and quite frankly, small investors really are just getting the crumbs off the table for much of what happens on the NZX.
Yeah, thanks, Giles. It's fascinating, that case. I'm just looking at your notes. We hadn't said we were going to discuss this, but have you heard from people today their reaction to this announcement from Judith Collins about doing a better job of tackling sort of base erosion and profit shifting? The multinationals, Apple and Google, always cited as the examples of companies that do it. Is this being discussed?
I wouldn't say broadly, but I had quite a long natter with David Snell, who's an executive director of accounting and business services firm EY.
Yeah.
Now, his view was that this was really the minimum the government could do. It couldn't do nothing on the issue. He thinks they're quite reasonable proposals, although he says that, interestingly, on such issues as transfer pricing, which is where basically a parent company loads the price of the goods or services it sells its subsidiary in New Zealand, and hence it transfers the profits back that way. He says that IRD has already had quite considerable powers to be able to investigate such issues and hasn't used them. So he's perhaps a little bit cautious about what extra powers it really needs and how it will implement them. He says this is generally in line with what's happening overseas. The OECD is the lead body in this one internationally. It's looking for some uniformity of tax rules and the way multinationals are treated. So he gives it a thumbs up, but he does caution that it will probably add to business costs. It may deter some people from coming to do business here, and almost certainly will cause some overseas firms to have to restructure their business arrangements here to comply with the law. But it gives the Inland Revenue certainly a lot more muscle to be able to go and police these things and take action.
Thanks, Giles. Appreciate that. How did the markets end the week?
Well, we mentioned Snapchat yesterday. We mocked it. We laughed at it. It went up. It went up 40% on its price today. So
look, I have 2 teenage children. Snapchat is huge in our house. Those things go flying past my head constantly from all their various devices. I've no idea what's on them, and I think ignorance is probably bliss. But
I think you're very wise, John. But suffice to say that if you'd bought in at $17 a share today, yesterday you would have been able to sell it at $24.50 a share today. Never mind, there's always tomorrow. Our own top 50 index was down 15 points. The New Zealand dollar is on the back foot. There are a couple of speeches from US Federal Reserve officials overnight, which many people think will beef up the case for a rate rise this month. So that means the US dollar's on the up. Kiwi is down 70.4 US cents, 93.1 Australian. That's business this week.
Thank you so much, Giles Beckford, our business editor. Have a great weekend.